Coming up on Market to Market, businesses work through a rapidly changing landscape on supply chains, turning waste into an investment in your operation. And commodity market analysis with Jeff French next.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because at Pioneer, our name is our mission.
For over 45 years, Steiner Tractor Parts has shared your love of antique tractors, new parts for old tractors. Learn more at steinertractor.com or at 877-559-7887.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
This is the Friday, April 18 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. This week featured Tax Day in the United States. April 15 has long been a marker of procrastination as filers complete their taxes just before the deadline. And it would appear shoppers were also sprinting before a tariff deadline to make some purchases. Retail sales added 1.4% in March, the highest mark since January of 2023. Analysts say the data underscores the uncertainty shoppers face as they try to get ahead of predicted higher prices due to new tariffs. And some businesses tried to do the same and import some supplies for their operations. Peter Tubbs looks at those efforts in this report.
This week, Americans continued to adjust to the economic ripples of President Trump's tariffs. The Port of Long Beach, the country's largest port, is estimating imports through their facility will decline 20% by the end of 2025.
Our concerns about reduction, I think, are going to really start being elevated as we move towards May. Our staff has now recorded 17 canceled sailings from the international carriers, which means less containers coming into the complex.
The port recorded its busiest January ever, and volumes are currently up 27% over the same period of 2024. Experts are unsure how much of the increase is being driven by importers increasing orders ahead of tariffs. But the tariffs are beginning to affect import traffic.
They're turning around container ships that were headed our way and just saying, just forget it, come on back. It's likely that hundreds of container ships that come in every week are going to be much less.
The tariffs on imports from Canada are adding uncertainty to the budgets of maple syrup producers in Vermont. As the producer of 73% of the world's maple syrup, Canadian companies are the main supplier of syrup processing equipment.
I've spent countless amounts of hours and lots of money in Canada because they are the primary producers of high-quality equipment. Any kind of disruption with our cross-border enterprise, we feel it.
Judd has been making Vermont's signature agricultural product since 1978, and the fickle weather of the Northeast makes syrup a challenging business. Judd is also dependent on a now tariffed global supply chain.
Our containers come from Italy. There's now a new tariff on Italy, so we're sure our container price is going to go up.
The maple syrup industry in Vermont has seen dramatic growth over the past 20 years. The number of sugar makers in the state has increased, and the volume of syrup has expanded 5-fold. But the on-again, off-again nature of the Trump tariff makes planning difficult.
We are producing a luxury product that isn't necessary for your table. It's something you like for your table, so we can't just arbitrarily raise our price.
For Market to Market, I'm Peter Tubbs.
An idea is just the start in business. Then there's the need for strategy, capital, marketing, customer service, accounting, and more to make it all work. You'll have inputs to help make products, and invariably, waste. Turning what is perceived as waste into profit, well, that's resourcefulness and could do more than just help the bottom line. Josh Bittner looks at a process that's helping the environment as well in this week's cover story.
For the state of California, taking a bite out of climate change is a high priority. In recent years, more legislation has sought to bolster longtime efforts across the board, and for some, solidified the notion that one person's trash could be another's treasure.
I think the landfill industry has a vested interest in seeing better opportunities for the use of the methane we generate. It's definitely a fact that California does typically set the standard, and then other states follow in the successive years.
Merced County Regional Waste Management Authority Director James Moore says his Central Valley utility now annually diverts 25,000 tons of green waste material they would have previously buried. Subterranean decay does act as a carbon sink, but anaerobic conditions underground also produce volatile methane, a greenhouse gas 28 times more potent at trapping heat in the atmosphere than CO2, according to the U.S. Environmental Protection Agency. Under Senate Bill 1383, approved by former Governor Jerry Brown in 2016, and in effect as of 2022, residents and businesses are required to compost food and other organic waste in utility-provided carts. The goal is a 75% reduction in entombed organic waste by 2025. The action has opened the door for contractors and jurisdictions like Merced County to not only produce compost commodities for landscaping and soil development, but capitalize on existing mitigation systems.
For the last 20, 25 years or so, landfills have put in, based on regulations, methane collection systems. In the last 20 years, it's become quite economical to capture that gas and use it either for energy generation or, under the new regulations today, renewable fuel standards, rather than just environmental control, burning it off or burying it. So there's an economic advantage to being able to put in these power plants or conversion plants and transform that methane into a renewable natural gas that can either be injected into the pipeline and used just like natural gas or be used to create fuel.
The Renewable Fuel Standard has benefited U.S. corn growers by requiring a percentage of biofuels, like ethanol, be blended into the nation's fuel supply. But the federal mandate also covers biogas, a cellulosic or next-generation source, which also qualifies to generate Renewable Identification Numbers, or RINs. These credits are sold to major polluters like the oil and gas industry to keep their emissions in check. California's low-carbon fuel standard, a similar state program, may be stacked with RINs to provide a dual windfall, an enticing incentive for a state at the forefront of the shift from gasoline to electric vehicles. Some say biofuels can help bridge the gap.
I think there's a real opportunity for biofuels, largely because they can be stored. If we shut down all the fossil fuel right now, the world would come to a screeching halt. We would starve, we would freeze. That's not the way we're going to be able to build a better world.
University of California Merced Distinguished Professor Dr. Sarah Kurtz spent more than 30 years working at the National Renewable Energy Laboratory in Colorado. Her tenure in Merced has focused on integrating various energy sources to collectively drive down costs, with a focus on choice as opposed to government mandates.
California is definitely a leader. They're doing some things very, very well. I do want to raise a concern that one of the ways they've done it is to say we want to do it at whatever cost, and we end up then we have some of the most expensive electricity in the nation. If electricity prices go sky high, then who wants to electrify?
UC Merced staff are tackling today's challenges from various angles.
This area where we are in the Central Valley, there's a lot of generation of biomass, not only in the Sierras for the forest type of waste that is available, but also agricultural waste.
Dr. Gerardo Diaz says biocircular economies keep money on the farm, and techniques like using livestock compost bedding made from sterilized manure solids can help cut methane and other objectionable byproducts.
We were able to show that there's a reduction in odor from the dairy production, so that really helps to improve the quality of life of some of the surrounding communities, for instance. Sometimes people don't consider those things, but we have a large community of people that are either rural or disadvantaged communities or low income that are affected by some of these aspects.
Entrepreneurs who've worked with UC Merced are harnessing the rising tide of energy incentives to help float dairy operations of all size and scale.
It's not super sophisticated technology. It's a natural process. It doesn't get more simple than this. It's a covered lagoon capturing the methane that is being released from the microbial activity within the manure. It takes about 30 days for the biogas to be generated underneath the cover.
Align Digesters General Manager Omar Ramirez says after purchasing the proper equipment, similar systems can generate power at 9 cents per kilowatt hour, as opposed to up to 22 cents from a local utility. He adds this dairy in Chowchilla, which milks 6,500 head, feeds his setup roughly 350,000 gallons of liquid waste daily, which can generate around 2 megawatts of power. Net metering can further offset inputs, while even more potential remains.
On the plus side, if you're doing renewable natural gas, you could also power your fleets on site to haul your milk, to haul your feed. It's really easy to really create a circular loop.
Critics charge this bevy of benefits encourages booming herds and exponential greenhouse gas. But Ramirez sees it as a hedge.
The dairy market is very volatile. In our mind, it's dairy first, and how are we going to help the dairymen generate that additional revenue stream while helping the environment and also putting a little bit more money in their pocket for the hard times.
For Market to Market, I'm Josh Bittner.
Next, the Market to Market report.
Better weather allowed for spring field work to be in high gear as a lack of moisture added to the picture. For the shortened trading week, the nearby wheat contract lost 7 cents and the May corn contract cut 8 cents. Soybeans were helped by the weaker dollar and improving crude oil prices, but the May soybean contract fell 6 cents while May meal declined $4 per ton. May cotton expanded 48 cents per hundredweight. Over in the dairy parlor, May Class 3 milk futures added $1.04. The livestock market was higher. June cattle improved 7.28. May feeders put on 8.15, and the June lean hog contract increased 4.70. In the currency markets, the U.S. dollar index weakened 82 ticks. May crude oil gained 2.79 per barrel. COMEX gold strengthened 76.50 per ounce. And the Goldman Sachs commodity index expanded by almost 20 points to settle at 538.45. Joining us now, regular market analyst Jeff French. Hi, Jeff.
How are we doing, Paul?
Well, I'm okay. I'm in the plains right now looking at the weather forecast. Still dry, still hot. Is that a factor now in this trade?
On the wheat? Looking
at
the wheat? It's going to be soon. I mean, we're getting into the season where it's very important. And Kansas remains awfully dry. They've been dry for a long time. But it's wheat, and wheat can come back from that. So if they don't get any moisture or reduce moisture here in the next month, the wheat's got a story. But if you look at the action in the wheat, I mean, it just can't get anything going. And you look at the 3-year low with the U.S. dollar, you would have thought wheat would have been a little stronger. But I think you're seeing a kind of an inter-commodity spread here. We had a nice rally in corn and beans here the last couple of weeks. They've used the wheat as that short leg. But anytime the wheat gets going, it just gets undercut by the Black Sea. I mean, they continue to undercut the world values.
So still the story that it's been then for several years. It's still the Black Sea story. Are there new buyers on the market with these trade challenges? I mean, everybody seems to be sourcing things differently. Has that come to the wheat pits yet?
It hasn't, but potentially. I mean, we're expecting, or they've hinted that there could be some deals announced here as early as next week with Japan and the European Union. So we'll have to see. But yeah, potentially. And I think that's what the market is. The market this week was kind of in a pause mode. We had a lot of volatility the last couple weeks. This week was definitely kind of a breather, sit back, and producers were in the field, so that reduced the volatility as well.
So if you're a producer, are you sitting back and waiting right now?
I'm not selling wheat down here. We'll put it on some protection on paper. But I just think this wheat, it looks like it's found a bottom. And with what potentially could happen and the weather, I would not be selling wheat right here.
So in corn, weather is quickly becoming a story for opposite reasons, right? Eastern Corn Belt supposed to get a lot of rain this weekend. Western Corn Belt still supposed to be dry. Rain was very isolated Thursday night in Iowa across to Illinois. Where's the weather? When does the weather story become a story?
You know, I think the rain right now probably leans a little negative. I mean, rain right now, helps us. I mean, the soil needs a little recharge. I think if you continue this wetness in the next month, it becomes a story. But I think the rain right now, and especially next week, the market will take that as beneficial.
Also, muted movement this week in corn. Why?
Well, it had a big move. It was up 10 out of 10 out of 11 days the last 2 weeks. That was a big move. And then you had areas, especially along the river, you had some of those July contracts that were paying $5 cash corn. So I think you've seen a good rally. Producers tend to reward good rallies. I mean, we were taking advantage of it. $5 corn from where we were at looks awfully good.
Let's talk about December corn, if we could. Phil, there's the December corn contract. Let's talk about Phil's question, if we could, here from Ontario. And he wants to know, is there any scenario where December corn reaches $5 in 2025, or is it more or less plausible than beans in the teens?
Oh, there's a scenario. I mean, we're not that far away. I mean, it feels like we're far, but we're going into the growing season. And you go back to 2020. The intentions in 2020 were for 97 million acres of corn. Okay, we planted 92 million acres of corn. So let's see what happens here during the next month. Do we get actually 95 million acres in like we intended to? We'll have to see. But yeah, you reduce that corn acreage planted to 92 million acres, and then you throw some weather into it, we could be over $5 very easily.
Okay, quite the scenario there. So let's say if take old crop out of this, new crop. Am I doing any positions here starting next week?
Well, I think you got to put some targets in place. I mean, we've come 35 cents off the lows. We're not looking to commit bushels right now in the physical market, but we'll put some positions on paper right now. But I think you got to have targets in every 20, 25 cents, stepped up, because we got big resistance up here at 480. And if we do get the acres in the ground, I mean, there is a bearish scenario down the road.
You know where corn's planted. You know some is planted, but there's been this shift to plant some places beans before corn. So does that change the scenario of which market is more impacted by weather, corn or soybeans, early in the growing season?
Yeah, I think it is. I mean, you're right. I mean, the last 5-10 years, it seems like everybody is switching to planting beans earlier. Now, this year, we actually did corn first. But yeah, I think it affects the bean market right now a little bit more with the wetness. But again, we're sitting here, it's April 18th. It's awfully early still. Talk to me here in the next month and we'll see where we're at.
Well, let's talk about beans then, because that $10 mark we didn't think we'd get back over it. And here we are now, a couple of weeks above it. Are we here to stay?
Well, I mean, the beans are interesting. As soon as China announced tariffs, I mean, beans, what did they do? Instantly rallied 75 cents. The uncertainty in the market is really what scares these markets. And once we kind of had some certain things that were known with tariffs coming from China and nobody else, that's when we saw the market take off. So, you look at a bean chart, I mean, July up here at 1050, it's had a big rally. We've got through 1050, but we didn't stay above it very long. But also, I just don't think there's too many old crop beans left in the producer's hand. I think it's in the commercial's hand. So that's really when we can see it move higher. But the beans have a story here. With 82, 83 million acres, you throw a hot and dry August, this bean crop, if it has any reduction in yield, I mean, there could be definitely a story there.
But the story wasn't a story for the longest time. People who sat in your chair for weeks would say, beans don't look I don't know, it's not profitable, it's not anything. Again, there's that, I've already made my planting acre decision, but is there still a few people out there who might pull the trigger and plant beans instead of corn?
Possibly, but I think Mother Nature would have to dictate that. And it's just too early right now for that scenario. So maybe in the next 30 days, we get late into May, we could see some acre switch.
Okay, November on that deferred on that. Again, is this one of those that you have targets on paper that you need to put on to protect yourself?
Well, I mean, to break even, most producers need about $11 cash beans right now. So, you have 1030 board minus the basis. It's, cash beans right now are probably 980 in most areas. So I think we're going to be patient here for the time being, put some protection on paper, but we'll wait till the growing season and see what happens here this summer.
You want to put any water on the rumor of China is now going to Brazil and Brazil might run out of beans? Is there anything to that story that we need to watch?
Potentially. I mean, they had an excellent bean crop, but I mean, this is the time of the year where China is buying from Brazil anyways. So let's see what happens. I mean, there's going to be negotiations. We've had a trade war, for 40 years. The U.S. just finally decided to join the battle. So let's see what happens with these negotiations, and hopefully they get something worked out here.
Are we caught in trade at all with livestock, specifically cattle?
I think the trade war benefits the cattle. I mean, if we're not bringing in beef or the actual feeder cattle from Mexico or Canada, that helps our domestic price. So the cattle look good. I mean, 210, 212 cash prices. The cattle on feed report came out Thursday afternoon. Maybe a little bearish just because of the 105% placements, but the numbers are going to remain tight. And we're entering May and June is probably some of our tightest time frame of this year. But you look at the general economy, I just think these prices are awfully expensive. I think the downside protection here in the livestock, all proteins, is a must right now.
The retail side of this has been talked about. Consumer, when it's pressured with a job or with high prices, it looks like now both of those factors. At some point, what's a signal that is converging on livestock?
Yeah, I mean, box beef up here at $340. I mean, you're absolutely right. We were talking, before the show. Beef is noticeably higher than the last couple of weeks. But when does that happen? I think it's kind of a slow rolling, and we'll just have to see. But yeah, you look at the general economy. You look at car sales and home sales. I mean, those are at or near or below, 2008 recession levels. So the economy feels like it's kind of slowing here, no question about it.
And when that happens, what does the box beef, the cattle market normally do?
Oh, it moves lower. Yeah. I mean, the consumer will go to cheaper protein alternatives, and they're much cheaper. You got obviously the pork, but poultry right now is awfully cheap.
Well, yeah. Let's look at feed. You mentioned 98% on feed, 105 placed, 101 fed cattle marketed. What one of those, you kind of hinted a little bit, of those, which one stood out to you the most?
It was the placements.
Yeah.
It came over about 2.5% more than expected, but we're coming off a month where the placements were down in the 80%. So, simply there's the tightness is going to continue. It's going to be what the consumer demand does.
And technically, that chart has not held with history in this whole run-up, right? This is more of a fundamentally driven story for feeders?
Absolutely. And it's been a story that's been going on for the last 10 years. I mean, this cattle herd is small, and it's producers getting out of the business, but also Mother Nature. The southwest of this country has been dry for the last decade.
Heck of a run-up in hogs this week, too.
7 days higher in a row. I think you got to take advantage of it. I mean, you have June right here, right at the 100-day moving average, right below $99.70, right below $100. That's big-time resistance. I can't stress it enough that get some downside protection here on the hogs.
Is that because you see it as a trade story or a supply story or something else?
I think it was a corrective bounce. Okay. I just think, again, it was kind of like the beans. Once the hog market knew what China was going to do, we had that relief rally, 7 days higher in a row. You don't see that very often. Get some protection in place.
All right, let's look at crude oil for a minute and the dollar, because those are two other factors that are always at play. You mentioned the heck of a run down in the dollar, which usually is good for commodities, but crude oil now has bounced back. Which one of those two factors is the biggest story we need to be paying attention to?
Well, I think, depending on... from your input side, obviously we want cheaper diesel, so that's good to see. But, you have this dollar now below, it closed at, I think, 99.19 for the week here. From a chart standpoint, this thing looks like it could go down to 92. Time will tell, but I think the main indicator will be is how long this trade war with China continues. But yeah, it's good to see that diesel prices have come down. And I think this dollar could potentially work lower.
All right. Good to see you, Jeff. Thank
Paul,
you.
thanks for having me, and happy Easter.
Happy Easter to you as well. That's Jeff French, everyone. And I want to say that we're going to pause this analysis, but we're going to keep going and discuss these markets in our Market Plus segment. You can find both analysis and plus on our website of markettomarket.org. Subscribing has benefits, and that includes our YouTube channel. And when you ring the bell for notifications, that's over on the right, on our page of youtube.com/market-to-market, you find out first when anything new is published throughout the week. Join us there right now. Next week, navigating changes in labor policy. Thank you so much for watching. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because at Pioneer, our name is our mission.
For over 45 years, Steiner Tractor Parts has shared your love of antique tractors, new parts for old tractors. Learn more at steinertractor.com or at 877-559-7887.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.